So typically, a lot of you may use candlesticks when trading. That is what most traders use by default, but there are more options out there. So in this video, we're going to dive in and we're going to talk about Heikin Ashi candlesticks. Heikin Ashi candlesticks are a smoother way for you to look at the trend. It does help to filter out a lot of noise. And if you use it right, it can help you open up a position and ride out the trend further on towards the end, rather than getting stopped out or taken out of your position based on a little bit of volatility. Stay tuned in as we explain Heikin Ashi candlesticks. How you guys doing? Welcome to Currency.com's channel. My name is John. We're going to talk about Heikin Ashi candlesticks right away. Just so you know, you can find my Twitter right here. Just go on my Twitter and search @RealJohnDoe. That is my handle for much more analysis that we do post as well on the channel. Make sure you also are subscribed to the channel so you don't miss out on more and more content to come. So I'm here looking at the Currency.com platform, and I also have an article from Capital.com opened up here, giving us a more visual explanation on Heikin Ashi candlesticks. So when looking at a price chart, many of you are used to just basic candlesticks here. The traditional Japanese candlesticks is what most brokers will have set up by default. But if you are looking to learn more about charting, if you do look in your chart options, you will have an option more than likely that says Heikin Ashi. And Heikin Ashi looks very similar to the traditional Japanese candlesticks, but this does help you read a trend a little bit cleaner and keeps out a lot of the noise. So we're going to do a quick explainer on exactly how to use it and the advantages that it has and disadvantages. So what are Heikin Ashi candlesticks? So they are one of the oldest forms of technical analysis. They are better for identifying patterns and visible price movements versus just identifying one session, because they do use multiple data points to calculate the next candlestick. And the term Heikin Ashi, it does mean Heikin and bar, which is Ashi in Japanese. And the main thing that makes these different from traditional ones is traditional just gives you data from the open, close. Then we got the wicks with the lows and the highs. And then with Heikin Ashi, it calculates all of the previous data from that previous candle and puts it into the next one. So price will be different when you look at each, even if you are looking at the same asset. For example, here looking at the S&P 500, it does show the Heikin Ashi is in a bullish pattern, a lot of bullish candles, but it's calculating the price at 4,321. And if we switch it over to traditional candlesticks, you can see the price 4,322, and the candle does show that price is below the previous ranges. And we do have a few red candles in there, but on Heikin Ashi, it shows that it has been a bullish 24 hours. So to see a trend in the market and to follow a pattern, it is good to have a look at the Heikin Ashi and to see how much price is staying above, and also having green bullish candles versus all the noise in between sometimes could take you out of your trade or position. But like I mentioned, Heikin Ashi will give you a different price, slightly different price than the one you are looking at in normal price chart. And that's because the Heikin Ashi formula uses a combination of 4 average price ranges: the open, the high, the low, and the close values, all from the current and previous trading session or candle. And if you look right here, we have the formulas. To get the Heikin Ashi close, it uses the open, the high, the low, plus the close, and then divides them all by 4 and gives you the close of that candle. And to give you the open of the next candle, it's always right in between of that previous candle, the average of that, which is the open of that previous candle plus the close of that previous candle divided by 4. And as we see here on the S&P 500, if you look, each candle, every time it opens, it's always in the middle of the previous one. And that's because, like I just mentioned, the formula it uses the open and the close, and divides it by 4, and that puts it right in the half point. And then to get the high, such as the wick of the candle, as you can see right here and right here, the formula for that, for the top wick, it uses the high, the open, and the close, and gives you an average of that. And for the bottom wick on the low end, calculates the low, the previous open, and the previous close to give you that bottom wick. So right here is another side-by-side comparison. This is a traditional Japanese candlestick chart, and this is the Heikin Ashi. As you can see, Heikin Ashi does show a lot more smoother price action as price trends upwards, but the traditional is not as smooth, a lot more wicks, and red and green candles mixed together there, showing a lot more noise during choppy markets, and even when trending, it's not quite as smooth. But don't let this fool you, because that is not always the advantage, because in a choppy market, this Heikin Ashi won't really help you out. So like we talked about in the calculations, the open price used in Heikin Ashi candles is based on an average of the open and close of the previous candlesticks. I do recommend to have a look at both when you're looking to get into that position, to kind of analyze if you are in a choppy or a trending market and what point you are looking at for weakness. Before we talk about the history of Heikin Ashi candlesticks, let me show you just how smooth it shows price action on a real chart here. S&P 500, you can see price dip down, nice and smooth, red candles, price bounce, lots of green candles, and just a little bit of noise, but price stayed smooth up until this point here, where we started getting some noise, and finally some big wicks on the Heikin Ashi towards the downside, and then that was suggesting strength is dying down in the trend. We did have another smooth run up, but after this point here, we did have a nice smooth run to the downside, and now it's looking like we potentially might flip that and continue that way. But I guess as time goes on, I'll see just how smooth the Heikin Ashi will show this price action in this next direction. Back to the history of Heikin Ashi. Where did it come from? They were developed by a Japanese rice trader back in about the 1700s. And this trader, last name Homa, is considered by many to be the father of technical analysis, based on a lot of work that he came up with identifying price trends. So in today's day and age, why are Heikin Ashi candlesticks useful for traders now? Analysis of Heikin Ashi candlesticks provide a reliable way for traders to identify the start of a major price trend, and also a trend reversal, because it does filter out day-to-day noise, which makes it extremely useful during periods of high volatility, which can cause a trader to lose sight of the longer term price movements. And introducing this to your trading, it can help you to maximize your gains on looking on where to open or exit and looking for those reversals and trends before they happen, like in candlestick patterns. Let me show you a quick example on the S&P 500 again. If you look here on the 4-hour on the Heikin Ashi, when it was topping out here, things started slowing down, and the Heikin Ashi started getting a lot more wicks to the downside and a lot smooth red candles pushing down. But if you look at the traditional Japanese candlesticks, for that same price level, there was quite a bit of choppiness and just a mix of red and green candles. And if you were entering on reversals, you would have got chopped up here. But if you did incorporate the Heikin Ashi candles, you could see that we had this smooth ride up, correction, another ride back up, but and then it showed strength start to weaken way before we had the big move down. So you would have been a little bit ahead in the trade. That's if you did know exactly how to read these candlesticks. They're not really 100% accurate, but it is good to learn how to incorporate this in your trading so you can use them to your advantage. So reading these types of candlesticks, it is pretty straightforward. Even for beginners, nice and smooth. You see green candles means up, red candles mean down. And you may have a better understanding of the formula now, like we mentioned earlier in this video, how prices are calculated. So now a big question is, how can you use this to your advantage when you're trading? Let's talk about the things to look out for. So in an uptrend, it will show progression, which means a green candlestick. And if you look here, when there is strength to the upside for Heikin Ashi candles, there will be no wicks to the downside, meaning strength is pushing upwards. And then the same thing in a downtrend, there will be no wick to the upside or shadow, and price will continue pushing downwards. So long green candlesticks indicate uptrend. Small candlesticks indicate price is in indecision. It is moving sideways. And long red candlesticks indicate downtrend. And long lower shadows indicate that there is some buy pressure coming in. Now let's look at this on a real chart here to compare. S&P 500 here, a reversal here after this correction. And as you can see, price stayed pushing upwards, no wicks on the bottom of these green candles until price started finding some support here. And after that started pushing up, again, same thing. Wicks stayed on the upside until it found some more support. And as you can see here, the candles got smaller and smaller, which meant price was indecision, but it ended up giving a breakout candle right here, pushing price continuing a nice smooth ride towards the upside. But if you look here where we had this big correction this past week, Heikin Ashi showed this huge wick on the upside for the S&P 500, which was one of the biggest now in a few days or weeks. And a big wick on the opposite side indicates that there are the opposite side of pressure coming in. So this here meant that there were a lot of sellers coming in, even though it was a green candle. So that was saying be aware for the next ones, how tight they are, and if we do get a breakout. But anything that flips red means sellers are coming into control. And the sellers came into control and price pushed down pretty hard. And you can see we got another huge wick here, which meant buyers were starting to come in. And that's what we've been having now the past day or so, is price moving back up. Price moving back up. Now it's finding support in this current range. And as you can see, the Heikin Ashi candle right here, it does have a wick on the bottom end, which is better. And it is forming support. So we most likely will see a push to the upside. But we'll see just how good these candlesticks will indicate the next move. And you can also use the same typical price patterns for Heikin Ashi, the triangle breakouts. If you look at currently right now with the S&P 500, we are forming a triangle right here. And I'm saying that is pretty similar to this same one happening right now. So we should expect to see the Heikin Ashi trade in a tighter range until price decides its next move. Typically what you will do is buy when you do see a reversal pattern like this with big wicks and price have a bullish reversal or price reversal to the downside from the previous candles. And you would look to sell once price is moving in a sideways range, and look to re-enter once price breaks out of that range again and starts some more smooth price action. And before we wrap this video up, remember Heikin Ashi does have limitations, so it's always best to use it with other technical indicators. You can use it with traditional candlestick patterns, as well as you can use it with the RSI, MACD, moving averages. It's not good to use too many indicators, but it is a great indicator to use with moving averages to help you see how much strength is in the price action and just what price when you should start looking to take profit on your positions or potentially stop yourself out of a trade and take your loss. Thank you for taking the time to watch this whole video on this explainer for Heikin Ashi candlesticks. I hope I was able to give you some valuable information and now you know something new, and you're also able to use it to help out your trading. We also have way more explainer videos on the channel, so make sure you have a look at those. Thanks for watching, and also don't forget to smash that like button if this video did help you out, and I'll see you guys again in the next one. It's John here with Currency.com. For more trading videos just like this, please subscribe to our channel.